Namaste and welcome back to the channel of Investing Advisors. Today on Wednesday, May 7th, we witnessed a broad-based sell-off in the Indian equity markets, with both the benchmark indices feeling the pressure. Let's dive straight into what triggered this and how the global and sectoral landscapes shaped up. The Indian indices ended the day in the red. The Nifty 50 index shed 81 points, translating to a 0.33% decline. Similarly, the Sensex closed 155 points lower, a drop of 0.19%. While the losses weren't massive, the widespread selling pressure across most sectors indicate a cautious sentiment prevailing in the domestic market today. We will explore potential reasons for this in a bit. Now let's take a closer look at how different sectors performed. It was a mixed bag, but the losers significantly outweighed the gainers. Interestingly, the auto sector managed to buck the trend, registering a modest gain of 0.17%. Perhaps some positive news and buying interest in specific auto stocks like Mahindra and Mahindra, Hero Motocorp, and Eicher Motors, which supported this sector. However, the PSU bank space faced a significant downturn, plummeting by a substantial 4.84%. This sharp decline could be attributed to various factors, including profit booking after a recent rally, concerns over asset quality, and underperformance in the quarterly results of Bank of Baroda, Union Bank, and other public sector banks, etc., and potentially some negative news flow specific to these public sector banks. The realty sector also took a considerable hit, falling by 3.58%, majorly attributing to asset quality concerns and large number of unsold units across the players. Lastly, the pharma sector witnessed a dip of 1.11% and metals were also down by 0.88%, indicating broader market weakness impacting these segments as well. Now turning our attention to the global cues, we see a selective picture. The US markets ended today, or maybe as we speak, it is still trading in the negative territory, with the Dow Jones down by 0.58%, the S&P 500 lost almost 0.53%, and the tech-heavy Nasdaq Composite declined by 0.67%. This negative sentiment likely played a role in the start of the day itself in our markets too. European markets also showed some weakness. The German DAX was down by 0.43% and the French CAC also fell by 0.4%. The UK's FTSE managed to trade flat, showing some resilience there. Interestingly, Asian markets presented a contrasting picture. Both the Shanghai Composite and the Hang Seng indices closed in positive territory, up by 1.13% and 0.7% respectively. The Japanese Nikkei was closed today for the trading. This divergence in the global market performance highlights the complex interplay of factors influencing investor sentiment worldwide. Now, lastly, on the commodity space, we saw some interesting movements. WTI crude oil witnessed a significant surge, trading positive at $59.54 per barrel as we speak, which was up by substantial 4.22%. This could be due to various factors, including your supply concerns, geopolitical developments, and the war news going across the world, and some positive economic data that is hinting at increased demand, maybe because of the uncertainty across the nations due to war. Safe haven asset gold also saw positive movement, trading at 98,460 per 10 grams, marking a gain of roughly around 2.6%. The increase could be attributed to risk of sentiment in some equity markets or a weakening dollar. Meanwhile, silver also traded at 96,900 per kilogram, which almost remained flat for the day. Now let's dive into the charts and the open interest. So this is the Nifty 50 chart, daily chart. So as you could see, today the market opened on a positive note, and from there on we saw immediate sell off coming in. So as yesterday as well we had discussed, so each time when Nifty is trying to approach the higher levels beyond like 24,500 to 600 odd levels, we immediately see the sell off coming in. And in fact, yesterday the US markets were already hinting the negative opening. Could be that was one of the reason for the sell off, because even the European markets did not perform so well. So we also, though opened on a positive note, but immediately there was a sell off that was seen start of the day itself. And looking at the candle, it is like a bearish engulfing, though it is not a big candle, but it has almost fully covered the previous day's candle, green candle in fact. But then we have to wait for this zone to break for a full-fledged sell-off to come in, or at least a kind of trigger that Nifty is now turning bearish and we are good to have kind of sell-off positions at the higher levels. So tomorrow is going to be very crucial again, because we have the US FOMC rate cut decision happening. In case if there is a positive news of rate cuts, then we will see a rally coming in the US markets. In case if there is no rate cut announced by Powell, then maybe we might trade flat on the US markets, and there would not be any movement even on the Nifty side. And this impact we would see actually on Thursday, but not tomorrow. So overall, the sentiment here is very clear that at the higher levels, Nifty is unable to sustain. Secondly, there is no large sell off also coming in. So we are trading almost in a consolidation zone for 8 to 10 trading sessions now. So what is expected here? So once we immediately close below 24,200, or come towards 24,000 kind of levels, that means it has already created a negative sentiment in the market, and we might start having a selling pressure on Nifty overall, which might tend or trend towards even 23,500 odd levels in the immediate next week. But provided if the Nifty closes above 24,500 odd levels, which was the high of today, and maybe subsequently takes down the previous 2 days high, then we are inching towards 24,800 odd levels, which we had discussed previously too. So Nifty is on a sideways zone, and immediately once it crosses the higher levels, we see some selling pressure coming in, and at the lower levels we see good support coming in at 24,000 to 24,200 odd levels. So for us, we have to wait for the support to get broken. So this immediate support is at 24,200 and 24,000 odd levels. Once that support gets broken down, then we might see underperformance coming in Nifty, and we will start trading towards the lower end at 23,500 to 23,000 odd levels for the coming weeks. So the immediate resistance for us is going to be 24,800, where we would spend a lot of time, and then based on any positive news we will run up for the higher levels. Now across the broader markets we had seen this sell off coming in. This could also be because today itself we had heard about the news from the Indian ministry stating that across the India in 244 kind of districts we would be having the mock drills for the very first time after the 1971 war. So that also could be some something to do with the sell off that we had seen today, because except maybe for auto sector, all the sectors had plunged. So some negative sentiments because of that news could also be there. Now let's talk from the perspective of open interest. So we have expiry on 8th May for Nifty, and almost each day we have been seeing some open interest position increments happening at 24,500 odd levels, which becomes the first resistance for Nifty. And then once we break this resistance, we might significantly move on the higher levels, as we discussed in the charts, towards 24,800 as the first trigger and 25,000 odd levels as the second trigger. So at higher levels we definitely see some significant open interest positions which have been continued from the start of the month. But yes, something surprising to notice at the higher levels, despite there was a sell off today, and the Nifty had fallen around 80 to 100 odd points, but still at all the higher expiries or strikes, we could see some unwinding in the open interest positions on the call side, which should trigger something significant for us. Maybe if 24,500 gets taken down, then we will not have any resistance coming in. Straight we would head towards 24,800, and the trigger for us could be because of the FOMC news. If that turns out to be positive, we might see US markets jumping to 1.5 to 2 or 2.5% tomorrow itself, and that would translate into positive news and sentiment even for our markets. And since we had been consolidating for a very long time, we might see a significant up move coming in, and this zone would be the first to be broken down, or broken out at the higher levels, and we will significantly move up from there on. The contradictory thing is that close to the 24,500 or in the higher levels also, some open interest positions on the put writing has also seen as unwinding. So we are going to firstly trade in a tight range between 24,000 odd levels, where we have support from the put writers, and then some support coming in at every 100 points at the lower levels from the put writers. So this 24,300 odd levels will act as a significant support as well as a good resistance. So because we are approaching the expiry, so in case if Nifty continues to trade tomorrow as well at the lower level, then we will see significant open interest positions coming in at these strikes, at all the higher strikes on the call side. So yes, some significant news that we are expecting from the FOMC, that could be one of the reasons why some unwinding of positions has been seen. Otherwise, yes, a good resistance is at 24,500 and a support at 24,000 odd levels. So we have to wait and watch which zone Nifty is headed towards, either on the lower side or on the upper side. So from the perspective of PCR put call ratio, so it stands at 0.8 overall, which is bullish to positive, and at the money it is 0.57, which is not that great. On the Sensex 2, we see similar kind of movement where we have small bearish engulfing candle, but it is not fully covering the previous day's wick. So overall, if we see, this is a kind of consolidation, candle or a pattern that we are seeing. So overall, for Sensex, it has to start trading below 80,000 odd levels for us to get the first confirmation or a change in the trend. So once we see Sensex closing below 80,000 odd levels, then that would act as the first trigger, and then sell off could continue from there on. But immediately the positive Sensex will turn to positive if we start trading above 81,500, or the previous high zone of 81,200 is taken down. So the immediate resistance for Sensex is at 82,000 odd levels. So we have been trading in a range bound kind of scenario for almost 8 to 10 trading sessions now. It is very trading in a very tight range. So immediately once if we break 81,200 odd levels on the higher side and below 80,000 odd levels on the lower side, then we will continue the trend from there on, either on the lower levels, or if it is positive on the higher levels. So till then we have to wait and watch. So we were expecting that trigger to come today, but today being an expiry, it was very calm for Sensex. This was not at all expected by us, considering that we had seen a consolidated moves for almost a week. We were expecting some, volatility to be there today because of expiry. But another thing, what we were surprised was, though VIX was, inching towards the higher levels and closed roughly around 18.9 to 19 levels. Despite that, with the opening itself, the premiums had shrugged off almost like 30-40%, and from there as well we did not see any movement. Hardly there was a movement of 300 odd points in Sensex. That's it. So on a expiry day, this was not at all expected, and despite the high wicks, there was no volatility seen. And yesterday, since we discussed that because of high wicks, though there is a general assumption that there would be a volatility, but yes, the option writers will get a huge benefit if they control the market by operating it within the tight range, so that they can eat up the entire premiums because of non-movement. So same thing had happened in fact today with Sensex. So now the volatility could trigger tomorrow when the US announces the FOMC rate cut decision, and then we would have impact on our markets on Thursday. So from there we might start changing the trend either on the positive or negative note. But yes, for us the immediate resistance should be at 81,200 odd levels. Immediately once that is broken, it's okay to go on long side. Similarly on the lower levels, once 80,000 is broken, which because that is the significant support that we had seen from this candle that had come up. So we have to break 80,000. Once it gets broken, then we might take positions on the sell calls. So now let's see from the perspective of open interest. So as we have been trading in a tight range of around 600 odd points from 80,500 to 81,200 odd levels. So we have the immediate both support as well as resistance that is emerging at 81,000 odd levels, and then even similar kind of pattern is seen on 80,500 kind of strike. So yes, overall, at the higher levels, we see significant open interest positions being built up on the very first day itself for the 13 May expiry. But yes, at the lower levels also we see some significant positions, but that is at a very far end. 79,000 is very far. So first, Sensex has to cross 80,000, touch at least 80,000 odd levels, see how Sensex reacts to those levels, and then whether the buying interest emerges at those lower levels. If not, then we will continue to slide further on the downside. On the high side, we are already seeing some bearishness because of good open interest positions that are built up at the higher levels. Since there is a negative news flow that is happening for almost a week to 2 weeks now, that could also be one of the reason the option writers or the option players at the higher strikes have been writing good call options so that they could get benefit of it, assuming that Sensex may not immediately move or skyrocket towards the higher levels, given the bad news that is surrounded by at least from the perspective of Indian markets. So overall, since it is just the first day for Sensex for the 13th May expiry, so we cannot comment, but yes, looking at the open interest positions, 81,000 looks the significant resistance as well as the support, and then we will have to see post that how it reacts. If there is a swift response, then we will move forward. If there is no swift response at the higher level, again if the sell off comes in, then we will trade in the range bound kind of scenario between 80,500 to 81,200 odd levels. Now on PCR front, overall it is 1.2, which is quite bullish and positive, and at the money it is 0.68, which is majorly coming because of this strike. So yeah, Sensex, we have to wait and watch. On Bank Nifty, in fact, there was a good sell-off that we had seen because of major banks, private sector banks also underperformed, and then public sector banks. There was a big sell-off that had come in, so which had impacted the Bank Nifty to move towards the downtrend. So this could be considered as the negative trend for Bank Nifty, because from here if it had slided down with such big candle, then it is perhaps a negative thing, and from here on we might slightly continue to move towards the downward trajectory. But yes, the trigger would be tomorrow's FOMC rate cut, and if it remains positive, there would be a pressure even from the Indian context perspective on the RBI to further reduce the rate cuts. Though our inflation is much controlled, so considering that positive news from the US markets, even RBI might go ahead and do the rate cut in the June month meeting. So overall, Bank Nifty seems to be quite negative. The sell-off continued at the higher levels of 56,000, and then from there on, despite it tried to move in this candle, and as well as here it tried to remain positive and move up, but then at all the higher levels we saw good sell-off that had come in, and then today it was confirmed because of almost 600 odd points downfall, that the support what we have over here remains crucial. If this support starts being taken out, then we might see sliding that could come up, and the first resistance, or the first support for us then would act as 52,000 odd levels. Yes, this is a big kind of parallel phase for Bank Nifty of 2000 odd points. But yes, since there have been only like in three short sessions, there have been a great move up on Bank Nifty. So we might see some sell off also coming in similar way, with may not be with the similar speed, but yes, gradually overall we might start towards reaching first 53,000 odd levels, provided if there is no positive news that comes from the US markets on the rate cut decision. So overall, Sensex is on a sell on rise mode. So at every higher level, if you see it is moving up, it is good to take sell call positions. On the open interest perspective, we see some open interest wind up at 53,000 odd levels, both in call as well as puts. At the higher levels, also we see around 55,500 some open interest unwinding. At 55,000 odd levels on the put side, there is open interest unwinding. So this suggests that Bank Nifty is going to trade in a tighter range of 55,000 to 54,000 odd levels, and since it has already approached towards 54,000, so this remains a very crucial zone. Though we do not have a lot of positions or open interest on the call side at 54,000 levels, but if there is no movement that happens tomorrow, and there is no positive news that comes in maybe from the US markets, then in just a day or two we will see significant open interest positions being built up at 54,500 and 54,000 odd levels too. So we have started seeing good open interest built up happening at 53,500 odd levels on the call side, which suggests that traders are taking positions until 53,000, expecting that Bank Nifty throughout the month would trade in this range of 53,000 to 56,000 odd levels. So we are presently in the mid range. Looking at the way how the charts suggests, we are expected to move towards the downtrend first, and then maybe we might see some recovery in between happening. So overall, Bank Nifty is negative, but on the open interest, it is going to trade in the range of 54,000 to 55,000 odd levels. Now from the perspective of PCR, it is 0.8, which is bullish, and on at the money it is 1.21, which is again positive. Lastly, on the FINNIFTY, even FINNIFTY, we had seen that bearish trend has already got initiated, and at 26,800 to 27,000 odd levels, we have been seeing that sell-off coming in at the 52-week high or the higher levels. So since almost 8 to 10 trading sessions now, we have been trading negatively on FINNIFTY too. So now we have this immediate support at 26,000 odd levels. Once we see this is getting broken down, then we will slide towards 26,200 odd levels, which acts as the first immediate support for FINNIFTY. So overall, as long as we do not cross 26,500 odd levels on the higher side, we should trade in the range breakout kind of scenario, in the range of 26,500 to 25,500 to 26,500 odd levels. So once 26,000 gets broken, we will see downfall coming in. If in case if 26,500 gets crossed on the higher side, only then we should remain positive on FINNIFTY for the uptrend to approach towards 27,000 odd levels. So even FINNIFTY is negative, but the crucial levels would be 26,000 on the lower end and 26,500 on higher side. On the open interest perspective, despite we are trading below 26,000 odd levels, still there is significant open interest positions continued at 26,000 levels on the put side. So that suggests that the support emerges at the round figures of 26,000. So we are seeing some open interest positions built up on the call side, but that is not significant when compared to the put. So at lower levels, if you see in the range of 26,000 to 25,500 odd levels, we do not see any open interest built up happening on the call side. So that suggests that the lower channel remains difficult for FINNIFTY until and unless there is any significant news that comes in. On the higher side, on the other hand, when you see, we see equivalent kind of positions being built up both on the calls as well as puts at higher levels until 26,600 odd levels, and then immediate resistance we have it at 27,000 odd levels, which is far away from here. So it has to cross a lot of hurdles. Every 100 expiries is going to remain crucial, because we have some pressure coming in from the call writers at the higher levels. So on FINNIFTY, the trading range is going to be again 600 odd points from 26,000 odd levels to 26,600 odd levels. So once either of these ranges are broken, then we might continue with the uptrend or maybe the downtrend at the lower levels. Overall, PCR is 0.8, which is positive to bullish. At the money is also 1.03, which is quite positive. It is coming because majorly of this positions on the open interest. Now FII and DII data is going to be interesting for us, because this would tell us some significant trends that we can capture from the both FIIs as well as DIIs based on how they are placed with their positions. So on the index futures, they are they have almost cut off their short positions slightly. 2,600 odd contracts are being continued. On indexes, on stock futures, they continue to remain long and bullish by holding 18.12 lakh contracts. On the call options, they are long with 37,496 contracts. On the put options, again they are long with 4,923 contracts. So net if you see, they are holding 32,500 odd contracts on the long side on the index options. So that is they are positive. That means they are positive. On the proprietary traders perspective, on index futures they are short by 5900 contracts. On stock futures they are holding minimal positions of 2.55 lakh contracts, which is okay, medium bullish. On call options, massively they have taken positions, long positions of 1.17 lakh contracts. And on put options again they have been long, uh, of with 60,650 odd contracts. So if they are long, that means put longs means that they are bearish overall on the option side. So net if we see, they are holding roughly around 56,000 odd contracts long on the index options. So FIIs have been long despite the downward trajectory that we are seeing in the market, and then even proprietary traders are long on the index options. Now let's see from the perspective of client or the retail traders. So retail traders on the index futures are significantly short by 30,000 odd contracts. On stock futures, they are holding the longs with 16.16 lakh contracts. On call options, they are short with 1.54 lakh contracts, and on put options also they are short with 1.22 lakh contracts. So net clients are short with 32,400 odd contracts. So this shorts will are maybe covered by the FIIs, and then proprietary traders still remain long. So tomorrow's trading session is going to be crucial, as we have FOMC meet, as well as Thursday we will have some impact seeing in because of the US markets rate cut announcement, and we will have Nifty expiry too. So the positions as of now, when we look from the proprietary traders as well as FIIs, seems to be positive, at least on the index options front. Now let's look from the perspective of cash markets. So DIIs have sold 1003, roughly 1400 crores of positions in the cash market, which had been absorbed fully by FIIs, and in fact they have traded almost more than 2 times of long positions compared to the DIIs. So as long as FIIs remain bullish with the Indian markets, we might not see a significant downfall that would be expected within our markets. Just that the major news or trigger would be the India-Pak retaliation tensions or the conflicts of war that we are seeing. So until unless that news doesn't come into reality, FIIs are continuing to back the or invest in Indian markets and continue with the long positions. So at least on the cash markets they have been very positive. So that's it from the perspective of overall analysis. So going forward, yes, it will be crucial to monitor global cues, especially tomorrow we have FOMC meeting on the interest rate decision in the US. Our markets will see an impact on the rate cut decision on Thursday, and we will also have Nifty expiry too. So that's it for today on the market updates. So we will be back tomorrow with another update. So if you found this analysis helpful, please like the video and subscribe to the channel for daily market insights. Thank you for watching.